and we're going to get ready to rock and roll. As most of you guys know, Brad is with us. Before I start with Brad, start typing in your questions so you guys could listen to the question, listen to the answer. There's a couple I got. I want to get more. I want everyone to have a chance to ask it. If you don't know about Brad, he's been to a couple of these Edge meetings within the last year or two. He's got a podcast. His name, Brad Jelnick, My Trading Life, that many of you guys have listened to. He does a few a week. Traded with me at our prop firm ITG back in the day. And but before we round back to him, like I do on these weekly sessions, give a quick update. Most people are in the trading room and know this, but if you're not privy to what's going on with the Turkish lira and this Turkey ETF that we have up, then you're missing a big part of the weakness over the last 2.5 sessions, starting into Friday and then Monday, yesterday, and then today, 3 o'clock this morning. Unless you're living under a rock, they denied an appeal from that pastor, so they weren't going to release him. We broke about 9 or 10 S&P points, opened up weak, and couldn't really make an attempt to rally after the open, and then fell through not only the overnight low, but that was also right in line. Let me show it to you instead of talking about it. That was right in line with Monday's low, if this thing loads. And so you had kind of a lot of room to move lower. I was telling people you got to be careful short up here or long down in here for moves like that. So we kind of clipped through from 20 to like 09, back to 12, down to 06, up to 10, down to 05. And then, and this was important and catchable, but you had to kind of expect it. And we were, or hopefully I had guys leaning towards it, is any kind of news that comes in with a injection of liquidity. I didn't think it would be Qatar that can infuse $15 billion into the Turkish economy. How bullish is it? It's certainly not bearish. It's something that's good. It's been affecting the weakness in global equity markets. You should know that. We know that. And it was the reason for this rally. And then for another pop that came a little after I shut the room down right in here. Now, since then, they get into this long up down bar and the market gets back to being a little bearish. So it's not just we could start running back up to 20, 30 and life is good. There's still some barriers for these bulls to navigate, including what's going to happen with sanctions on Turkey and tariffs on them and then back to us, including this could be a dud, but it could be a decent move if this Manafort verdict, which I think the jury will be sent out to deliberate tonight or tomorrow. If it's not guilty, that could be short-term bullish. If he's guilty, that could be short-term bearish for stocks and for the indexes. Know that. Also know, I say this every week, anything that comes to light with the Mueller investigation, if there's some finality to it, with no more indictments, it's bullish. If it's continued to extend or something, it could be bearish. And then any kind of trade war talk between us and China, mostly, that's the biggest concern. But if they could wrap that up, if there's a headline that comes out that they're meeting and you're short equities, you're gonna get your no one handed to you. So that's a quick update. If you just come into these weekly Tuesday sessions, which of course this week is Wednesday, but we've got Brad. Like I said, what year did you start there, Brad? At ITG, I forget.
2002, I believe. 2002.
Yeah, it was a couple years after me because I was starting in 2000. So, and you right out of college, right?
Correct. Yep.
Didn't Dave meet you guys? You met those guys at a job fair up in Wisconsin? Did they go up there?
University of Wisconsin job fair.
Did they hire anybody else from that area? Do you remember?
Yeah, they had a crop of people. They did. They had like 5 or 6. I think maybe like 2 or 3 stuck around.
Yeah, there was at that point they started hiring guys in groups every 6 months or so, right? And put you through the same training. And that was even better because when I started, it was more impromptu education than structured. So It was
Groups are good because you can kind of lean on each other and share experiences, and you're going through the same process. So I always think the group's a good idea.
no, it was a great idea. Plus, a lot of the first crop he hired in a prop firm were guys with floor experience, and so they knew how to trade pretty much. We knew what to look for. But you're hiring someone out of college that might have a financial market background, even if they followed it. They don't know bid offer. You know what I mean? They don't know.
It doesn't matter.
Some of that stuff, right? You had to get trained for it. All right, so the couple questions. You guys just pop them in here. Got a couple in here, but I'd like everybody to ask them. This is the same Brad that you've heard on the podcast. What's it called? My Trading Life, right, Brad?
It's called the Trading Life Podcast by Brad Jelinek.
All right, let me pull up these questions. That's why I'm pausing a second. I'm going to leave the charts up. Might be distracting. Maybe I'll take these down and just talk. Let me do that. That's easier to render it. Hold on a second.
No problem.
No, you know what? I'll leave them up. Shouldn't be. If they're distracted, then you shouldn't be a trader. All right, so I asked this earlier before we came on, gave Brad a second to think about it because it's a good question. Number one behavior or tactic traders use to reach consistency. In other words, a morning routine of very real professional traders. What would be your response to that?
My response would be similar to any professional, in that the things I thought of right away were consistency. I'll get into what this means, but consistency in what you do, self-awareness, really understanding how you are and not somebody else's routine, and third one, make it your own, which is kind of related to the second one. And the fourth thing I had written down was LeBron James and how he and many other athletes, he's so famous, we always think about a guy like that, but he comes to the gym really early, often rides his bike if the weather permits, has gets there 3-4 hours ahead of time, does stretching, shoots around, has the same routine every single time. So it kind of sets the body at ease, and it sets the mind at ease to have something that you're always doing the same thing. So, because what you don't want to do is show up and get emotionally, I'm sure everyone's gone through this, where it's really busy and I got to hurry up and get into work and make some money. It's been slow for so long, and then it's really busy, but you miss the move, and then you start doing stupid shit, and you have a horrible day. And it's really busy, but you just lost a lot of money. And it's great that it's busy, but it doesn't mean you're going to make money. So the routine. So to get back into those points, consistency, for me, it was always getting in at a similar time and reading, just kind of getting an idea of the news and what does everyone else think. And then self-awareness. So if I'm not feeling well physically, or I have company in town, or I have obligations, I'm really skeptical about even being there to trade for that day, or I'm trading smaller because I just know that can set me up for a bad day. And the other thing I'll do is think about how I've been doing lately. If it's busy and I'm doing okay, I'm feeling good about it. If I'm really struggling, I've had a lot of losing days in a row, or I'm in a slump, you're going to have to trade a little bit smaller, because psychologically, if you start losing when it's busy and you're already struggling, you go down a pit that's hard to dig out of. So I like to make it as easy on myself as possible. I actually made a sheet with a little checklist of things I do in the morning, so maybe I'll post that. I'll post that one day. But it's just kind of going through things like this and seeing where you're at. And making it your own is the other thing I would say. Make your routine your own. So you can read a zillion routines, the Miracle Morning, my routine, someone else's routine. But really it's about you feeling very comfortable with what you're doing. And if you're someone who struggles with keeping consistency, maybe that's okay if that's consistently how it is. I don't think there's one way to do it, but doing something different every day probably is not the best approach to it. So hopefully that kind of answers it. And just to add a little bit more, my shared experience on it would be, so now when I'm trading a little bit more stocks and I'm a little longer term, I don't have the same routine I had when I was doing futures. My routine's a little different. I get up a little later some days. I stay up later at night. I'm on Pacific time zone now because I moved from Chicago to Seattle. So my routine has shifted into more research, and maybe I'm watching the market more in the middle of the day towards the end of the day. So I'm still aware of the same stuff, but it's just not when I was trading futures, like a lot of you guys are, it was get up, analyze what did Europe do, what did China do, what's the news, is there a 10-year auction today, what does everyone expect retail sales to do, if retail sales is strong, what could happen, if it's weak, what could happen, how am I going to act if these things happen? And I would just lay out scenarios every day. And I would also lay out what I think the biggest surprise could be for the market today. And that was a good one to stretch my mind. And so then I would come into the day very open-minded, and then I would go into the session ready to act depending on what happened.
I like that. No, and to stretch your mind, so if you go in without an open mind, you might just find things you're looking for to validate your bias or your opinion. You let what you were researching pull you in that direction if you should be bullish. Did you find yourself coming in bullish or bearish a lot?
Well, yeah, I mean, today's a good example. So I heard all the things that you said, and it's funny because when I was trading futures every day, I would be really intimately aware. I had every news service up, Market News, Bloomberg, and I know all the headlines. And I didn't even know a lot of the headlines you told me. I'm looking at the chart, and I've been negative on the market for the last few days just because the emerging market stuff. There's a couple of squeeze on Friday where I felt like everyone tried to jump the gun, and then they squeezed them out in the close in the U.S. And I just felt like the cracks were starting to show up with the Italian and German spreads and with Turkey. And the U.S. dollar is having a huge rally. It's putting a lot of pressure on emerging markets. And the U.S. is so extended performance-wise. So I'm kind of having a little bit of a lean. And then I see that metals are falling out of bed, like copper. And I see that fixed income around the world's been rallying. And usually those markets move ahead of equities a lot. So usually it's a week later or so you see the cracks in the equities. So this doesn't surprise me today, but when I see stuff like the move from 28.05 to 28.15 this morning on whatever you said it was, they denial, or they're going to release
right.
what did you? Pastor?
Yeah.
Yeah. So I'm aware of the story a little bit, but I didn't know that happened. To me, that's just a bullshit story in a situation where the market's kind of decided what it wants to do. So to give you an example, I'm reading a book called The History of the United States in 5 Crashes. It's called by a guy named Scott Nations, and it talks about all the biggest stock market crashes we've had. And the longer you stick around and do this, the more you see the same script play out over and over and over again. So like there's some event that you don't really anticipate that cracks something that's probably been ready to crack for a while, and once it cracks, you get all these like government headlines and things that pop it up, and those are just selling opportunities until, because the whole thing isn't going to change because the pasture is or isn't released. That's really just a sideshow. So I sold on that. I shorted it up at 15s and 16s and just kind of scaled into it because for me, I didn't even need to know what that market move was. I just liked the chart, and I felt like we cracked. I felt like we squeezed people out a few times the last couple of days on the close, and we had that strange up day. I think it was yesterday. Yeah. And then this morning when we just took off down on the open after retail sales, it was decent, right?
Yeah, so was New York Empire at the same time.
Right. So we had decent data. We sold off, and then I'm thinking, okay, metals are getting crushed the last week or two. Fixed income's rallying all over the world. German, Italian spreads are having trouble. And now we sell off hard, which is real money on the open on decent data. And now I'm thinking that the pasture is going to save the day. I don't think so. That's how I look at that.
The pastor was like the excuse to go down, and they did on it. And if they came out and released them, they'd rally it, but it would be temporary. If we're gonna stay weak, it would be a temporary jump and rally, just like the infusion of 15 billion from Qatar came in at I don't know, 10, just after 10 Central. They rallied it from 05 to eventually 13, and then down to 10, rallied to 17, but then we broke them back to 7. So if it's weak, I like your take on the crack. It's like an egg that's not cracked as a bullish market, and a little crack in it, and just a little leak of the yolk, another crack, and it goes right where it wants to go, leading it right where it wants to go.
Exactly, and the market decides. It's usually, so things crack, and there's like big picture crack like the 1929, 1907, 2008 crash, which is something different. But there's little cracks in our time frame, and when the crack happens, it might be for something that you don't understand, or you don't understand why now. It is when it is, and when it happens, then you get a whole slew of headlines that aren't really related to fixing it, that are just kind of band-aids, and those are really good trading opportunities for our time frame, I think. Because you can catch them maybe real quick if you're buying, people are stuck short and maybe you're long on that, but then that eventually it's going to give you a good area to sell if you can kind of conceptualize the day and what's happening.
Here's a good question. How do you bounce back when your first trade is a loser? And how do you keep the upside when you're green? This is more when you were trading
Yeah, no,
interday stuff, right?
and I still try to follow these rules because right now a lot of my stuff is 2 days to 2 weeks, some of my trades. So I'm kind of following similar rules on that. So I'll start with the second half first. I have a clean answer for that. So if I'm doing well because the market's having some nice movement, and then all of a sudden I feel like I've had 5 or 6 winning trades or winning days in a row, you would say, well, I'm going to raise my size because I'm doing well. But I don't think that works that way, because you might have been doing well because you understood something or the market was in a good spot. And then the minute you raise your size, we slow down and you get the money back. So oftentimes when I was trading my best, I would cut my size for no good reason right in the middle of the day. Like say you catch the sell-off this morning, maybe you get long a little bit too and you're having a great morning, and now we get this chop in the middle of the day. I'm cutting my size down and saying I'm only going to risk 25% of what I made on small size, and I'm done if I give it back. And later on in the day, maybe there's a big move again. I'll trade it small, and maybe I fall into it a little bit bigger size, and then I'm having a fantastic day. But what I'm not going to do is think that just because I had a few good mornings that I should be trading much bigger. The trading much bigger just happens on its own. You don't even have to worry about it. You start getting your head right and seeing things, and it'll just accidentally happen. It's like if you're an athlete, you don't need to think about hitting more home runs. You're hitting singles, doubles, and then all of a sudden you're hitting home runs. So it's hard to accept that, but it will happen on its own if you just protect the downside. That's been my experience. And on the losing trade side, psychologically, that's your biggest enemy, is when you start feeling like you're down on yourself and you really were bullish and you kept getting stopped out, and then it went up anyway and you're so frustrated. So, but what's happening is you're trading the P&L and you're trading the market because you're worried about losing money. You're probably trading a little too big and you want to get that money back, and it's busy. So a good remedy to that is just suck it up and trade small enough where it matters, but it really doesn't matter money-wise. And when you get to that spot, you can put in the proper stops, sit through those trades. If they don't work, you're not as emotional, and you can say, well, it didn't work. Okay, why didn't it work? What can I do next time? Maybe it's just a good loser. That's fine. But then you catch a few of them, and then you start getting your confidence back, and then the size goes up, and then now you have a better template going forward. So the tendency a lot of times is like, oh, I'll just stay trading big and have a really small risk limit, and then you just keep getting stopped out. So when I start with some losers, I'm aware that that's how a bad day starts. So I start with losers, right? Usually a really bad day doesn't start with a bunch of winners. So your best days are going to start green and keep getting greener. So if you start so I'm basically trying to cut the bleeding right away when that happens, because that's probably going to be when one of my bad days is. Because even if I come back from a bad day and have a good day, that's not the norm. It happens sometimes, but it never happens on my best days, generally speaking. So you just have to be aware of the bigger perspective and just look at yourself from a little bit further away and say, am I really willing to give back 2 weeks or a month because I'm going to throw a temper tantrum today? And then hopefully the answer is no, and you correct yourself.
And this dovetails into this next question, and I'm pasting them into this notepad so we could follow. And this next question is, what do you do if you're not seeing your best setups? And the reason why I say it dovetails into the previous question is because none of what Brad said was outstanding, but none of it matters if you don't have an identifiable setup, or you're not clear, because then your first trade is a loser and you're going to let your mind take you easily to the negative and to the avenge trades and the trading the P&L, as Brad said. And then if you are green, you're going to think it's random. So you got to have a setup first. But to his question, what do you do if you're not seeing your setups or your best setup, Brad?
That can be very frustrating. And if you look at the hedge fund world or something, you can see a lot of value investors have struggled. David Einhorn, there's a bunch of guys who have struggled for a few years now because their style is not popular. And then like 2017 in cryptocurrencies, for instance, it was a momentum style. So you're buying highs and you're doing really well, adding to winners, and then it changed into a bear market. And the same thing happens with day trading, where every day is different. One day you need to buy the high, the next day you need to buy a really deep pullback. So one thing I do is try to categorize the kind of day it might be. So after a big trend day or a couple of trend days in a row, usually you get a mean reversion day the next day where it goes up to the highs and comes back to the middle, or it takes out the lows and everyone panics and then it comes back. So I'm trying to always get an idea of what might be going on with that. But if I'm not understanding my setups, it's okay. It's really hard to do when it's moving because you feel like you have to participate. but I almost have more success when I sit back and just put in price alerts and say, I'm not trading until it gets to this area or until something comes to me. So when I first started, I didn't have a lot of setups. So, and as I got doing it more, you come up with 10 or 15 different tools in your tool belt, so you have more to work with. But when you don't, it might just be a matter of waiting more. And that's why sometimes like a part-time trading strategy, even if you're in front of your screen all day, is a better strategy. So you don't get, it takes just 1 or 2 good trades a week, or maybe 3, not even, it could be 1 to have a good week. So you don't have to force your setups if they're not there. You really don't have to. Like, think about the sports analogy is always good. Take walks, you get hit by a pitch, you bunt, you make some plays in the outfield, you do what you got to do, you stay alive, and then all of a sudden you get a run of the stuff that you like and you take advantage of it. And then as that's happening, you're learning about stuff that you can add. But when you're doing stuff that's not part of your plan, you're not learning new stuff and you're getting beat up. And then when your stuff does come along, you're probably missing it because you're mentally beat up. So sit tight is the short answer.
And I think people get bored. They think, well, I need another setup. And maybe they need another setup, or maybe you can't let your boredom dictate your activity. Like, I'm bored, so I'm going to look for something. Because your mind will find a reason to put something on to get out of boredom. That's when your mind has you on a leash. And I don't mean to diminish alcoholism, but people I know a couple people who are alcoholics, they don't get stuck doing it because it makes them feel like crap. It makes them feel good in the beginning. It gives them the pull, the grab. And so don't let your mind grab you and pull you into things that isn't what you set out to do, isn't the setup you're looking for. If you never see your setup, then you got to either regulate yourself to being a very long time frame trader, or a guy who might trade once a week and be okay with that, or look at drilling down to find another setup that you might be able to execute. But don't let boredom start making you find things, because you're not trading your personality anymore. If you're only seeing your setup 1 a day and you want to make 5 a day, then you should have never looked for 1 a day. You got to know what you are, what you want to do, how active you want to be. And then I think what the best thing you said in this answer was, like, categorize the day so you have an expectancy of movement, and you're not playing breakouts when the volume stinks, and the ranges are tight. So no, that's a good answer. And I think this comes out of, what do you do if you're not seeing your best setup? I think it comes out of frustration that they're not involved. You know what I mean? I think that's what happens,
of course.
Right?
Well, yeah, and I would add to it too. Think about this. If I do this trade 1,000 times, am I going to be in business? If the answer is hell no, then don't do the trade. Resist it. Or if you have to do the trade, you trade in 10 lots, do it with a 2 lot. And just say, I got to do it. Fuck it. I got to do it. I just have to do it. Okay, do it small then and take a loss. But don't, just understand you have to zoom out and see the big picture. This goes back to preparation and mindset. When you have your family in town and you got to have lunch at noon and you're trying to make a little money before the lunch happens, that's when this stuff starts. So you can also stop some of this by really understanding the position you're in. If you've been struggling, when you look at all that, like, imagine someone else standing over your shoulder knowing all these things about you. They could probably predict that it's a good time for you to be stupid today if you're not careful. You should be able to predict that too. And I mean, it's easy for me to sit and say all this. I've lived this my whole life, and I still today make mistakes all the time on this. But it's what I'm saying is true. It's just a matter of, can you do it? But this is the way it is. This is the truth.
My wife is good at letting me know when I'm going to be stupid. Nothing. They're good predictors of that. When you say something,
it's very true. Actually, they know, like, be careful today.
Yeah. Well, and I don't mean it in a sense of how I'm going to trade, just in how you're going to. It's like knowing someone. I don't think you know someone until you work or live with them, or work with them, and so their tells. Like, they're in a bad mood before they might even think they're in a bad mood based on what they say. So, and I try to use the trading acumen that I've created to measure my risk. And I say this jokingly, but it's serious. I try to say, I know if I'm going to get a kiss or a kick based on what I'm going to say next. And it's just managing my risk. Maybe I want a kick because I want to joke around, but I expect it. so you're not surprised. And if you're not surprised, you react better. You know, if you say something
Sure.
to your wife or spouse, and you to get a rise out of her, and then she gets mad at you, and then you're surprised she got mad at you, then that's your fault. You know, if you're trying to say something, get someone mad, and then they get mad, then you get mad because they got mad, you're not managing your risk. So it sounds weird, but it's helped me. It's helped
Sure.
me. Um, Here's another way it helps you, because we're so tied into being right and avoiding being wrong. It's helped me in our, debates turning into arguments and not allowing it, because I don't care about being right. And so you could either diffuse an argument or um, admit that you're wrong early in a discussion, because you might be. You're more objective when you take your trading skills into everyday life. You remember Mike, the psychiatrist that came in and worked with
Mm-hmm.
us? You worked with him too? You know what I'm talking
Mm-hmm.
about? The
Yep.
psychiatrist. He said something. He might have said it to you too. Well, first of all, I don't think he was that good in helping us, because he didn't know anything about trading. We were teaching him what we did. I don't think he hurt us, but I think there would have been other psychiatrists who actually traded that could have helped us better. But needless to say, he said something interesting in one of the sessions. He says, what's fascinating about you guys is that you guys are trading at its rawest level. You know, you're trading every day in and out contracts and prices. He goes, you got to think, we're doing that all day. We're trading ideas, we're trading anger, we're trading emotions with each other, right? With your spouse, with your friend, with your, and nowadays, how many things are you trading on Facebook and social media? All the ideas that are being traded back and forth. And if you can't manage your risk and what you say and what you read, then you're going to do it when you trade, because now there's money involved, right?
Mm-hmm.
So that was the one thing that I got out of him. But did he help you in any way?
At times it's just all it is just reframing your mindset, just stuff
That's
that you
right.
like when if someone can teach you how to look at something from a different perspective, you feel better after. So I think any therapist can help you when you're really emotional. They can just tell you, hey, you can look at it this way, and then after a while, you're like, yeah, I can understand how this might be helpful to me. Because every lesson, no matter how painful, always supports you in your growth. And it's easy to say, but sometimes you need to be made aware of it by a professional.
Say that again, that last part about your
Every
growth.
lesson, every painful lesson is happening because it should happen. It needs to happen, and then it
Yeah.
supports you on your growth going forward. And sometimes you can't see that in the moment, but without the lesson, you're not. If you need to take big losers, then you need to take them to get the lesson, and you keep taking them until it hurts so bad that you're not going to do it anymore. And that's just. So I always tell myself that's just. I guess I needed it, and until I don't, and that's just the way it works.
No, that's good. So the next question is, how should you characterize your experience trading stocks versus futures? Do you think there's a big difference? Which do you prefer and why? Do you
I think it's
understand that? You could reread it if you want.
Yeah, no, I understand it. I think it is different. So in stocks, I don't day trade stocks that much. Once in a while, so I'm a little bit more of a swing trader in stocks. I think futures are day trading futures is like the most emotional lion's den you can be in because it's highly leveraged. Every tick matters. One of the big differences I've learned is there's always this debate about entry versus exit. And in leveraged futures products, by far, the most important thing is your entry. You want to get a good entry so you feel like you have a look at the market. And then the exit is easier. You can kind of just get out if it doesn't work out when it's going your way. I don't know if you agree with that, but exits are, yeah, they're important, but entry seems to be way more important. But when you're trading stocks longer term or swing trading, exit is way more important because a lot of times you just can't, it'll gap open a certain way. And if you don't get out when you say you're going to get out, a lot of times you just can't really get out. And so I've learned to have to focus on my exit and honor my exit a lot more in stocks, at least stocks that are traded over many days. In terms of the moves during the day, they are different animals. They really are. Just like you guys know that the 10-year and the S&P are very different in their currency or in oil. They all trade a little different. It's the same thing with stocks. They move differently. The players act differently. You have maybe less algorithms, more funds. In the S&Ps, you have traders and gaps to fill and stops to take out. And you don't have that as much in stocks. You do, but it's a different beast. I wouldn't say that your skills aren't transferable. They certainly are, especially logical things about market reacting to news and doing what it's supposed to, all the stuff that we talk about to set up a trade. But it takes a little bit of getting used to. It really does. It's kind of like you swap in your wife's personality with someone else's, and then you got to get used to that. I would say it's similar, but the general principles of how to be a good husband or a good friend still apply.
Well, that's a good analogy. Do you look at a stock that is like the indexes are weak today? Let's say they get weaker. You look at stocks that are up on the day when the indexes are down a lot on the day. Does that help you, or is that
Um,
part of any research you do?
sometimes I'm more interested in stocks that make news moves on news that I think is bullshit. So,
Okay.
for instance, if something's beaten down, I think it's kind of broken, and then it rallies really big because some,
The pastor?
for instance, yeah, the pastor. So Facebook's an example. Facebook had a terrible earnings report. I was always skeptical of the company, but I can't really short it because it's just going up forever. Then it got cracked, went down to like 160, and then it rallied back to 185 or 187 based on some report that they're going to share data with banks, which to me is just a bullshit report. To me, that report is people who are stuck in the stock are just putting that stuff out to help get out at a better price, because people who are long that forever plant these stories. This is a conspiracy theory, by the way, but I'm a believer in the way I've seen news work over the years. Like if you're a big fund and you have a whole bunch of Facebook on and you got caught in that gap and you're still up a lot of money, but you want to get out, and you have an idea that they're dealing with banks to share data, which is really not that big of a deal for their earnings anytime in the future. You leak that story, the market's having an up day, the stock rallies up 8 or 10 points on that. It's a great place to help liquidate out of your holdings. So I use that to sell short.
Yeah.
I shorted into that news because I feel like they had a horrible report, and I read through it, and there's a lot of problems, and I think it's going to get back down to the upper 160s, lower 170s, which is halfway there already, and I'm selling it on that kind of crap. So that's the stuff I look for, which would be similar to selling it today on, I see it's back above the area now, but that's what I sold it this morning on whatever the headline with the pastor was. So I'm looking for little trades like that and trying to grab my little singles and doubles, and then the home runs, they kind of come to me. They just kind of fall to me. If I keep doing that right, eventually the home run will happen because it'll go your way, 6 handles right away, and you think, uh-oh, I might have a home run here, and then it goes and goes, and you can add to it, and those just happen sometimes.
Were you always good at adding to winners?
I was a huge add to winners proponent. I always have. I know it's been frustrating when the market's choppy.
Yeah.
And I give back a lot of small to medium term winners, but I've made my trading's been the 95-5 plan, where 5% of the time I make all my money. So I'm trying to stay clean and hit some singles. But when those big days happen,
you're on the right
heavily, I heavily add. I get like 10 times bigger and add. That's just doesn't happen a lot, but that's what I do when I believe I'm right. And that's not something I necessarily think everyone should do, but it's just worked for me. It fits the way I trade.
Well, it's like
some people are going to be.
Yeah, some people aren't built to steal bases, so don't, you're
Right.
thrown out a lot. It's a skill. It's a highly disciplined skill to add to winners, because you're going to turn nice winners into scratches, and then it's a bigger winner when it goes. You're always seeing your P&L retract in it, at some point.
Yeah, and I'm kind of a fundamental day trader, if that makes sense, where I like days where, the CPI misses huge and the bonds can't do what they're supposed to, and they rally the whole day the other way. And those are the days I'll just keep adding and adding.
Yeah,
that'd be an example where I don't feel a lot of pain. I feel like everyone's stuck. So I end up getting a lot bigger trade on and feeling like it's not really going against me, and I can kind of it's comfortable. So that would be like an ideal situation of when I would do it.
I think
it's certainly not an everyday thing.
To your point about entries being more important than exits, I think they're all important. The only thing that's more important to me is an exit for a loser. I got to have an idea where I'm wrong before I get in, just so I'm not surprised. It's like, okay, area, not necessarily tick sensitive, but I think that timing with entries are important. I mean, even if you expect the trade to go your way right away and it doesn't, then either change your expectations and trade the area, or get out, right? If your timing is supposed to be that, and I don't mean yours, I mean anyone that's
Sure.
getting in. If you expect it to be that, I don't want to say perfect, but you expect at least a little head start on it, and you usually get it when you're right, you got to adjust when you're not. So I've adjusted where it's not so much tick sensitive, but area sensitive. And if you can't have too big of an area, of course, but if that area for you is even too wide, you got too much on then, because you can't just, and you know this, you can't buy, like right now S&Ps are 17. You can't buy 17s and risk 1675s. It's not going to happen.
Right.
But
It doesn't work.
it ain't going to work. But you can time it where you can find some short-term stuck guys. But I do agree with you that it doesn't really matter what someone, like, anytime you're risking money, to me, everything is important. And entries and the exits, and it's just, and I tell people, now he's 14. I've been saying this since he was born, but my 14-year-old son can get out of winning trades, right? It's your ability to get out of losing trades that kind of mark your ability to trade, and nobody wants to take a losing trade. That's why they're skilling getting the hell out. I just like to have an idea of where I would get out. I got a question to you with stocks though. Are none, I lost it, but it was, so you answered, if you are watching a stock, let's say like AT&T, it's up 1% today, and the broader markets are down what, a couple percent? I don't know. I think they closed at 40, so they're down significantly. And you're watching AT&T to get long. Are you looking at that not to buy it today, but buy a pullback on it? If you're already watching it and you're bullish.
Yeah, I know what you're saying. Looking for, that's a classic tool that sometimes works really well between like Europe and the U.S. in day trading futures. I found it to not work that well in stocks.
Okay.
I mean, over a bigger picture, because AT&T is like a beaten up high dividend utility. So when the market gets weak, it tends to like stay strong. So it's kind of expected. It's kind of a bomb shelter stock.
That's
a little
true,
bit.
right? Yeah.
So, and then the other thing too is like, over a long period, if something's really moving one way and something else is holding up, it could be a sign that, yeah, that's stronger and you should buy it. But those divergent type date, because with futures, you have all these people who are real short term, who are kind of stuck, and they're trading big and they're looking for these little short term moves. So you get a lot of that. Like this one's going down, that one can't go down, and then when one of them pauses, the other one pops. Doesn't seem to be as effective of a strategy in the stock market. I've noticed. I've gotten hurt on that a lot, trying to transfer that. And it doesn't mean it never works, but overall, I've not found it to be as effective.
You like future to future, index to index, or index to economic event or story that diverges better than
Yeah.
index to an
Yep.
individual stock. When you get short or bearish, are you doing it in options, or are you buying the stock to sell it?
I sometimes do options if my position is a little bit longer term. Otherwise, I just sell it. It sucks because you don't get as much leverage in stocks. But one thing I do is, like right now, when everyone's worried about the market, there's really high put premiums. So what I'll do is sell the stock short, and then when it comes off a little bit, I'll just start selling puts against it and collecting like all that disaster premium that everyone's who's buying puts is pushing up. So it's kind of a nice way to, so like if my Facebook short goes down in the low 170s, I'll probably sell like the 170 puts and pick up like another $3, $4, $5 or whatever.
So do you know anything? Because a guy asked me if you know anything about options, and I said, well, ask the question and I'll ask him. But his question is, would you talk about the put call ratios and how you interpret them? Is that something?
Yeah, I mean, yeah, I do. I have a whole bunch of indicators I watch to see if the market's out of whack, and I subscribe to a bunch of services. And the put call is just one of those things. I look at more of a composite of a bunch of them. There's like a CNN money and fear index or something that has a lot of that built in. You can look at, but I look at it's called, I think, McClellan summation or McClellan oscillator or something like that. This is for more bigger term stuff, not during the day as much. I look at put call ratio. I look at futures positioning, inflows and outflows into ETFs. And I'll do that like every week or two and just get an idea of what's everyone actually doing and what's the sentiment and the tone out there, and then just kind of look for really big extremes and just be aware of it. So sometimes on the big extremes, like everyone's really positive, or then there's some really strong bullish whatever that comes out and we can't rally. I'm kind of thinking, okay, well, this might be a day that we could get hurt if everyone thinks we should rally on this and we're not. So it's just a background context type thing, as opposed to, oh, I'm going to use this to day trade today. It's like, yeah, I do, but not directly, if you know what I'm saying. It just provides context.
So I think I know your answer to this, and I think people that are here in this meeting, and most people, even though guys have been doing it, some guys have been doing it for a little while, for the most part, nobody has been doing it as long as you and I. And when you've been doing it long and you've been day trading for 10 or 15 years, like we have, you can't do that. It's just like an athlete. You can't just always do that, right? You sometimes got to take a step back and make less trades. And sometimes the market isn't conducive for scalping, because it's not. All the algorithms, they clean up the little ticks here and there. But someone asks about why you switched from futures to stocks. Was it because stocks were more conducive for longer time frame that you wanted to get into?
Yeah, that's mostly it. I mean, I spent 13 years just in front of the screen all day day trading, and I'm actually doing a little bit today. When it's busy, I will be in here day trading more, but I don't want to sit in front of the screen and day trade as much. It doesn't mean someone else wouldn't want to. It's just I spent so much time doing that I kind of burned out a little bit from the computer time. So, and I also want to get bigger and trade bigger and expand and maybe even trade other people's money someday. And if I end up, I need to be beyond futures to do that, because it's too hard to do that day trading futures. I think it's more of a one-man game. So I'm trying to develop strategies that are more scalable, and it's been a work in progress, kind of moving it over. It's not that futures aren't worth doing. It's just kind of part of my expansionary process of I did this, and now I'm going to use that to try to step up to another level, and then go to another level from there. And this is part of doing that, just stepping up to a different level.
It's one of the reasons why I kind of backed into educating it. It relit my ability to sit in front of the screen, because you're talking with others, you're helping others. Now, if I didn't provide value, I would have realized that early, and I wouldn't be doing it. But when you do provide value to almost everyone and give them a much better chance, not that they're all successful because of me, but I think I give people a better chance than they otherwise would have. And as long as you're able to do that, it keeps your passion lit, and it also connects other people. So a lot of these guys are connected, which allows them not to get complacent, or should not. It should allow them not to get complacent if they're using community properly. Because no matter how I was talking to a guy and he happened to be in martial arts for 35 years, and I didn't know it. And I said, there are guys that are as disciplined as people who know MMA, and they're thin and they're fit, and then they'll get into trading and they'll be the most out and disciplined person in the world, even though they're physically as fit as a person could be, and they can train themselves to stay out of fights or win fights when they're gonna. But then they get in front of risking their own money, and you throw it all out the window, and they're useless. So you can't ever diminish how weak the mind could get, no matter how strong it was in other industries and other businesses and everything else. So community, which is kind of what this is. I mean, these sessions are once a week. You know, when you started, every day you guys had to meet. It was I actually would have been better off early in my career had they structured it for me. While I knew bid offer size and correlations and stuff, there was no what's the word I'm looking for? You had to go, right? And you had to go after the session. And how long did you guys meet for in your group? Like a couple hours after like in the afternoon?
Yeah, it was maybe like an hour. I think what I would add to some of that is the futures to stocks switch. Part of it too is just when I started, I had no choice but to do futures, because I needed money and I needed leverage, and futures provide that. Where now I have made money trading, so I have my own money to do stocks, but I couldn't do that in the beginning. So that's another one. That's just a simple reason.
That's a good.
That's not the reason, but I'm able to do more stuff now than I was when I was 22 and I had no money.
Yeah, you had the leverage, even because you're not even day trading. They'll give you like 4-to-1 leverage if you're day trading stocks and you're not carrying over your positions, but you are. So the leverage is probably 1-to-1.
My stock account is like 7 times bigger than my futures account, cash value, to trade the same size as it has to be, because they just don't have the leverage.
Right. All right. So that's covers that one. Mark comes back. How has changing? Let me type this in or copy it. How has changing your time frame helped your trading from day time frame to holding for 2 days or longer?
How has changing? Let me read this again. How has changing time frame helped your trading from? I'm trying to understand it. How is changing? Okay, well, let me answer it kind of in my own words, I guess. I'm not sure I totally understand the question exactly, but I would say that doing this makes me a better day trader too, because when I've extended my time frame, I've gotten a bigger perspective, and with a bigger perspective about how the market moves, I'm able to come in on a more fundamental shift type day, and I can sometimes put on day trades and hold them longer and see something that I've seen shape up that I think is coming longer term, and I really wasn't aware of that. It's like you're aware of the trees and the forest a little bit more when. So I kind of come back to my own. Yeah.
I don't mean to interrupt you, but you're going to come into more directional days instead of having
I
to
kind of
trade
fall
the
into
job.
them.
Right.
I wake up in the morning and I come in, and since I have this skill set where I've day traded, so I know how to day trade, I know what I need to be doing. And I just come in one morning and I see something happening on the screen. I just think, we're going to go down today. I've been waiting for this for a few weeks, and I see the signs are showing up, and then I can kind of hold it better. Whereas when I'm just day trading, I'm not necessarily becoming aware of that. So that's definitely helped. It's kind of like, I'm a sprinter and I got really good at it, and then I learned to run the mile, and then I went back to the 800, and now I'm sprinting again, and it just makes me better at everything.
This is from the same guy, so I'm going to ask it back to back. Do you look at scenarios or templates that occur in the market and your self-awareness that would tell you that this is a trade for me, or this is where to get into trouble, so I'm staying away? Take your time and reread it.
Yep, let me read it again. Yes, absolutely. That's a really good question. Yeah, that hits on the self-awareness thing. So there's things where I'm thinking, I know that so-and-so is probably having a good day, or this is their market, but it sure as hell isn't my market, and I'm very worried about this, or I'm scared of what I can do to myself because it's moving and it's busy, and I feel my heart beating, and I can sense that I'm on the edge, but I don't feel comfortable with it. And those are the days where I'm better off just trading really small, or it's okay to trade small or stay aside. And so I absolutely do that. And here's like an example. So, excuse me. So there's an event like a Fed meeting or an employment report. I think there's a good chance they could, if the report comes in one way, that we could run up, take out the highs, and then sell off the rest of the day. So I have some setup like that in my head. The biggest danger of a setup like that is I start to believe it's true before it actually happens. So then I start fading the market as it goes up because I think it's going to fail and go down. And then even if I'm right, it might go up 3 times more than I thought. I blow out, and then it goes down. I'm depressed. So you really have to not believe yourself too much. It's great to have the scenarios, but don't will them into happening. Let them play out. Don't break all your rules because you think your scenario is going to be true. It's more important than when the scenario does play out, then you can jump on a little bit harder. So that's a huge lesson that I'm still trying to learn is I start thinking that my scenarios are going to happen, and I got to let them happen, not predict them to happen.
It's like a detective that's good interviewing a potential suspect to know when to ask the right question. If you think the guy did it, but you ask a question too early, you might tip him off. But that's a
great analogy. Yeah.
There's a way to ask the questions in a certain order based on what he's doing, right? Because it ain't the same case. It's the same scenario, but not the same person, right? The guy might be easier to interview, harder, so you got to roll out the questions strategically, where you tip them off as to what you're trying to get from the question with the answer. So, no, that's a great answer and a great way to look at it. But
yeah, what you said too is you can also like if you're asking leading questions as a detective and you're kind of pushing someone to answer the way you want. Well, if you look hard enough, confirmation bias, right? It's like the biggest thing we struggle with. If you look hard enough, you're always going to find what you want. And that's probably the number one biggest risk factor when you have a bad day is you keep finding things you want to see. But is it actually true, or you just want to see?
Yeah. And if you're asking too many leading questions, there's a chance he might catch on to it. I just want my lawyer. I'm not answering no more. And then you're stuck. At least those are the drama series I watch. All right, here's another question. I didn't read it. I'm going to read it now. If a news story airs or you have another reason to come up with a bias, are your short entries at previous highs or your buys at previous lows or at support? Or are you buying and selling instantly?
Okay. If a news story airs and you have another reason to have a bias comes into play.
So let's say you're short and a bearish story hits.
Okay.
Are you selling? I think this would be case by case, but are you selling instantly or are you looking to sell it back at resistance?
Great question. It depends on the day. It could be get the hell out and cover my shorts on the weakness. If it's one day, if it's a slow, rangy day, and the headline is just kind of like, I've heard the rumor it might happen, or it's not super unexpected, then it's all about the market. And this is a really good question about you have to diagnose the market. Because I'll give you an example. When we're in a bull market, the stupidest up news can just rip us higher all day, and it doesn't matter. Yeah. But in a bear market, even better bullish news like that will barely even budge us, and we'll just go right down to the lows. So if you know the market's breaking and it's weak and it's just vulnerable, this is where you have awareness of other time frames and the bigger picture and what people are doing in the bigger stocks, Netflix, Amazon, all that stuff. You start to see that when we're cracking, any good news is just going to be a pop and then back to new lows. So it's an awareness thing. It's really what it is. There's no one answer for that. It depends. If it's obviously Donald Trump, is canceling the infrastructure tax plan, yeah, we're going to go down really big on that. You should sell that and probably hold it and add to it.
Because you're not going to get a pullback.
Right, not going to get a pullback on that. That's a shock, right? But little stuff on a day where it's rangy that pushes you through the lows by a few ticks, probably a good time to get out. So I wish I could give you a clear answer on that, but that's probably the best answer I can give.
That's relevant to today. You're bearish coming in. You've been right, and
I'm bearish still, yeah.
Yeah, let's say you're up at 3 a.m, which is 1 a.m. your time, and then the pastor comes out, which is a negative story because they didn't release him. The positive story is if they released the guy, but it is a negative story. It went down more than it otherwise would have because the market's bearish. So it was just a story leading the market where it wanted to go. But if you're up and you're bearish, you might jump on it right away saying, I'm already wanting to get short. This is my win moment. This is my timing. And
sure.
That would
what I do is I goose it. So say you're short a 10 lot, that happens. You hit it with another 10 and then it goes down and I'm out of like 80% of those and now I got 12 on, and I do stuff like that all the time. Well, I just goose it, take a few handles and then go back to my base position.
You pay for the trade.
You can buy yourself a better average short price or something like that. There's a lot of ways to do it. I do that a lot.
I think, the gist of the main thing getting out of this Q&A is that, if there's context, you better understand it. Now, there isn't always context. The market isn't that bullish or that bearish at times. So don't try to say it's bullish, it's bearish. But when there is context, understand it. Know the path of least resistance. And the S&P future is sometimes very rotational. So there might be context, but it's rotational within the context. It's not the trend. That whole trend is your friend is only a phrase because it rhymes. It's not your friend. Usually when you identify a trend, it's too late. You know what I mean? So when it's got a clear pattern, you got to predict the trend and know where pullbacks are fair. But with the S&Ps, you don't often get rotational directional days like this, meaning it goes, it went. It went from 20 to, I want to say 8 pretty quickly without any major pullbacks. And then it screwed around for a while between 5 and 10 and whatever. And now it might rotate back up and trade 20. So if you're just playing that perfect downtrend, you're not going to get it. Maybe you get it more in stocks. I don't know. But
no, it's just the biggest, cleanest down moves happen when you think it's already gone too far, and then it goes more and more because everyone's stuck on and they think it's going to turn and it just doesn't turn. So the beginning of the down moves are tough. They're choppy. They come way back. It's just, and that's part of. I get caught in that too. I get short and I have a lot into it and I don't take it off and it comes back and then I'm irritated and I get out and it goes down, and that's just part of, sometimes you just don't get that quite right and you just have to protect yourself that you don't blow out when you're doing that. And I leave a lot of days on the table more than I should by trying to go for too much, and it's always like you're always working to make yourself better that way. No one's ever doing it perfectly.
Does Brad think trading futures long-term is a losing situation? If so, why?
Well, I did it.
No, I think he means trading long-term, like holding on to positions, like you would in stocks. Is that a losing situation in futures?
Man, that's tough. I think that's like macro futures trading. There's not many people who do that well. I think here's why I don't like that. There's so many things out there that you see that everyone else sees. Like when you're looking at data that all the best hedge funds in the world have their own people combing through, they know it before you do, they know it better than you do, then you're basically competing with those people and you're going to lose. But if you stick to something very short term, more specific, or not even short term, but like
Intraday.
big event, intraday, or
Yeah.
big events that don't, like things that are throwing people off balance, things that don't do what they're supposed to, or you're an expert on mergers or after earnings trades or whatever, I think you can do really well with being in your niche and having your strategy. But when you start to try to read the news and look at the dollar and think it's going to make gold do this or that, good luck with that. Not going to be very successful longer term. You might catch a few, but unless you're world class and you're in one of those groups and you have an information edge, I just think that that's a recipe for trouble.
It's holding on to a trade for a couple 3 hours. That's different than three
Oh
weeks
yeah,
or
I do
3
that all the
days.
time.
Yeah.
I was always a longer term day trader. I had my average holding time was probably like a half hour, but I had a lot of 5 minute, 2 minute trades, and I had a lot of 3 hour trades.
Yeah.
I had that a lot. So that's okay, I think. And it's not that it's okay or not okay. It's just like long term, do you really think you're going to be able to figure out interest rates, the dollar, and stock markets with leveraged futures better than those guys? Why?
Yeah. And then if you do, there's better plays, maybe in options or individual ETF, not futures. It's just
Right.
leverage.
But if you get into like little niches that you develop that you can lean on, you can make a lot of money being a specialist. And I think that that's, or you can ride the wave on a fundamental day when everyone's moving money, because we make our money when bigger people move their money and it creates volatility. So we can ride those waves and we can do little trades using like all this pasture stuff and this Turkish stuff. Like those are opportunities for us to get in there. You love that. For us to get in there and make money on these moves that big guys they don't care about. So we can find success in there. But
I want to catch an
on,
up. I want to catch an
yeah,
uptick in the past. I mean, if I'm sitting here and they release the pastor, it'll rally. How much I don't know,
yeah, it'll rally. Yeah,
but it'll. That's not going to extend it. Because this lira I think was in trouble before the pastor, and I think that the pressure and the sanctions the U.S. put on it. But I think it was in trouble before all that, before the
of
U.S.
course it
sanctions
was.
and
This
all
is
this stuff.
this it's nonsense. It's like saying that a couple who was fighting for years got a divorce because of one little event at the end of it. That's what's going on here. It doesn't. It's
No,
a sideshow. This stuff is just a sideshow. It doesn't.
it's been building
In
up for other reasons, fundamental reasons,
right, exactly.
what kicked it over the edge. And no, that's the way to look. Hey, this is a good question. What would you say your edge is in trading stocks versus trading futures? Let me post this. Do you kind of understand that?
Yeah, it's a great question. I like that question a lot. I like it because it hits on exactly kind of what I've been working on for a long time, which is how did I become successful in the futures world, and how can I turn that into success using a little bit different instruments and a little longer time frame. So I was a great sprinter for a while. How can I become a great 800-meter runner, or a great, I'm not saying I was a great, I'm just saying the example. How can I be a great, distance runner? You guys get what I'm saying. And I can't do the same things, but it's track and field, and so I love these analogies because they're very similar. So for me, I'm still working on this. I started to do some fundamental research, and that wasn't really for me. I do a little bit of it, but I was competing with guys who knew more than me about balance sheets, and that wasn't my game. So I kind of got away from that. And then I'm starting to isolate now that when there's news stories and stocks that don't really matter for the business, or when everyone's really giddy and excited on a message board, and then stuff isn't acting the way it's supposed to, or earnings can't make the stock rally, I find like there's trades for me to do in there where I can make like $2 or $3 with decent certainty and have like a smaller risk. And I can do options and stocks, or I can do outright shorts or longs. And I'm starting to zero in on stuff like that, and it relates more to what I was doing successfully in the futures. And then outside of that, other stuff kind of shows up just from me being curious. Things will show up. Like I was trading cryptocurrencies in 2017 a lot because I just noticed that it was moving and it seemed like a good market to be in. So I was in it for a while, and I was using my skills in there, and then I left. And I'm in it this year, but it's just going down every day mostly, so it's tougher to do stuff. But so those things will show up. You might be a stock trader, S&P trader, and you might find that trading fixed income on news and events is a good thing for you to do sometimes. I found that to be good for me to do, even though I didn't trade the bonds all the time. I would trade them on events. So
Right.
hopefully that kind of answers it.
Did you catch that move? Came out 8 o'clock Central Time, in 2005 when they reintroduced the Bond?
No, I was like, no, I think I was like in the kitchen or something. I missed that. I know that was a big one. Yeah.
Because I did too, and I was running back, and Dave says, "Well, when you miss it, it's generally your fault, and you weren't supposed to be there, or not supposed to be there." But
It happens sometimes. I mean,
yeah.
I remember driving into work in a panic, and they cut rates. 2008, they cut rates
Yes,
a bunch of times, and I missed one of those rate cuts, and everyone's in the kitchen, kind of, glad handing each other about the great move, and I'm walking into work, just feeling like shit because I missed this move that everyone wants to go to the bar the rest of the day, and I'm trying to trade, and
that was
everyone's giggling
yeah.
and laughing around you, and you're wanting to just strangle everybody. You
Yeah.
shut up.
That was
So
at 6 o'clock, the
yeah,
global rate cut in '08. That's what it was. It was at 6 o'clock in
yeah,
the morning.
yep.
And some guys just maybe had their best trade that day because it hung there it was very catchable because
Oh yeah.
it was like it hung there for like 5 or 7, 10 seconds, and then they just spiked the Euro stocks 100 ticks. And the Euro stocks was becoming pretty liquid, right? So you can get 500 or
Mhm.
1,000 off. And a couple guys I think did, not to mention their names, but those were heatless 6, 7 figure winners. But you had to know what to do and how to react to it. And well, we did. And if you're not in front of your screens, you get mad. I tell this story. I got to tell it again. I'd get to my office usually 6:30, 6:45. And so I wasn't as mad because if I was always there at 6 and then that day I wasn't, and then I would have really been pissed, right? But when you're not there, so I was at my mom's house, which was not too far from my office because I had left ITG at that point. I had an office down the street in Downers Grove. So I was there dropping something off, and she came out, and she always listened to the radio in the morning. Well, they did something with interest rates, like the whole world. I zipped out down the stairs, got in my car, and I'm like,
Say what?
yeah.
What'd you say?
Scared. They did what? And I'm like, well,
Uh,
I missed it, but she knew about it before I did. But I
uh,
understand it happened. And then there's moves that we would catch that someone else wouldn't, or events rather.
right.
That
Yeah,
someone
that's
else.
the way it is. Yeah.
I remember the week before Christmas, or between like last couple of weeks of December, we used to close down, and then towards like the middle of '04, '05, we'd stay open, and they had most guys were out, but there was a big move because they thought they caught Osama bin Laden, and it was BS, but they thought that was a rumor that they had caught him, and the market was still sensitive to it. It was not '05; it was closer to like 4 because it was in the new. But my point is that you're not going to catch every single thing. You just want to be in a routine, so you're in front of your screens, and so you don't put yourself in a position to be there every day at 6, and then you're not. Then it came out, and then you're mad. Hey, that happens too, but you're not going to hit every great hanging curveball. You're going to foul tip them. You're going to miss them. You're going to be injured that game, right? I mean, it just happens. It's part of any business. I got to tell this other story. I missed a day because um, hold on a second. I'm going to stop the recording and tell it. But that happens. That's part of the business. And if you're around other people that understand it, they tell you that. Do you have time for one or two more, Brad, or you got to run?
Yeah. No, I can do one or two more.
You're in. Tell people what you said about Seattle. Like Chicago, everybody thinks it's dangerous because the killings, but that's just one section. You said something about Seattle. Everybody thinks it rains, but that's BS.
Well, it does. Okay, so I like it here. It does rain. It mists a lot because of the way the mountains and the water kind of mix up to give you a cloud cover. In the summer, it burns it off. So every day you get really strong, dry summers. It's not quite as humid and hot. But the rest of the year, you have a lot of drizzling. So you do get a lot of drizzle, but the actual rain count isn't not as high as a lot of the Midwestern states even. So, but you just get, in Chicago, I was like, oh, how can you live there? Everyone's getting shot. Everyone would ask me that. I'm thinking, what? I'm not shot. I lived here for 13 years. No one shot at me. And then here it's the same thing. Everyone thinks you're just drenched every day. So there's always some truth. So yes, on the south side, there's a lot of problems. And yes, it does drizzle on the off season a lot, but I find it to not even affect my life at all.
Like,
I do like it a little bit better. When you're from the Midwest, you have no problem at all being out in this because you don't. The winters are so much milder that you don't even it doesn't phase you. The people from Southern California, they bitch a little bit because they're used to sun all the time, so then they complain. But from the Midwest, it's you really don't
you're from
even.
Wisconsin originally, though, right?
Yeah, from Wisconsin. Yep.
Okay. There's some guys in here that are from Wisconsin, so.
Yeah, I'm from Rhinelander for all the guys from Wisconsin. I went to school in Madison, so everyone probably knows where Rhinelander is, which is funny.
Is Rhinelander close to Madison?
3 hours north.
Is it? Okay.
Yeah.
All right, let's get to this other question. How do you, let me type it in here or copy and paste it. How do you control yourself from over trading your scenario that you think will happen but has not yet?
Good question. I like to put something on, sometimes small, to get in the market. Like I'll put a feeler. I'll send some soldiers out and see if they come back alive or not. So I'll send out maybe a fourth of my position or something and see how it plays out, and then I can always add to it. Sometimes it'll break and then it'll retest and then it'll go. So I'll sell the retest. Or if I'm really sure about it, I'll trade it a little bit bigger. But that's one strategy. The other thing I do is if it's been slow for many weeks or months and the volatility is just down like a couple of years ago or last year, it was just horrible. We had nothing to do. Everyone remembers those periods where the VIX is so low and there's just nothing. It just grinds up 5 handles every day. On those days, I tried reading books. That didn't work very well, and you want to be in front of your screen in case something happens. So I started watching TV series and stuff while I was, honestly, I would have them on, and
right?
It did work. It worked well because I would just automatically I would still have my chart up, and then I would be pulled into the market when a busy move would happen, and I would end up making money on it, but I wouldn't be doing a bunch of stupid stuff because there's nothing to do. And a lot of times, the best trade is just to do nothing and wait for movement because we make money based on other people moving money around, so we can't force that to happen. Sometimes we just have to sit there, which is super hard.
You got to distract yourself, and that's what you did. You found something to distract yourself, and that was watching, but you were in front of your equipment. The other thing is everyone should recognize their scenario quicker than anybody else recognizes your scenario. Meaning yours should be recognized quick. You should be able to watch a TV show, and if you got some pattern scenario playing out, boom, you recognize it. Or it's the beginning of your scenario started. It could be kicked off by an event that comes down the wire that we used to call tape bombs, or it could be just a big move up, down, and now it's playing out, right? The beginning of the story. A happens, B and C are going to happen, and you got to know A, you got to be on top of A better than anybody else is on top of your A, is my point. So I should recognize my setup quicker than Brad recognizes my setup, and vice versa. And that's important. But I think most people are this is a weakness. There isn't proper documentation to solidify your pattern setting up. So you start to see things that aren't there, or force it, or you miss it because you didn't see it. In other words, and I'm not saying this because I created, and I haven't rolled this out. A couple people know about it. Brad, you know about it, this journaling tool. But if you're not journaling, I'll ask you your opinion. And maybe later on in a month or two, we could have a session just on journaling. But Brad really likes the thing I'm rolling out. I'm not going to get into it now, but if you're not journaling and documenting, is that not a big weakness, Brad? That's my question to you. Is that not a big weakness if you're not doing any kind of documentation one way or the other?
Yeah, I did a podcast on this early on when I started it, and basically what I said is what I believe is, again, this is one of those things where everyone tells you to do it a certain way, and it might not. I tried for years to journal, and I just never really stuck with it over like 3 or 4 months, and I would quit, and I kept starting and stopping. And the disposable portable journal method works better for me, which means when I'm struggling, when I'm doing well, I don't need a journal. I'm doing well and I'm fine. Leave me alone. When I'm struggling or I'm bored, I need a journal. So what I do is take a piece of paper and I write down, here's my ideas for today, here's my scenarios, here's where I'm wrong, here's what I'm going to try to wait for. And then I see at the end of the day
Nice.
that I follow it. And then I just rip it up and throw it away. And then maybe the next day I don't need it. And then when I need it again, I do it again. Because I never end up going back and looking at it. And I
Right.
never, because I don't want to go in the past and I didn't want to
And
be forced into a routine.
it's
So I
not
just did it
practical.
when I needed it.
It's not practical to read and read and read and read and read and then not have it. So I think that's why you like the thing that I created, was the fact that you could delete it, or it's easier to go back and listen to it. But it's when you want
It's
to
like
do it.
therapy, though. I totally agree. It's like therapy. You're not feeling well. You need a friend or someone to boost you up and get you to see things a better way. And then when you're done with that and you're mentally better, you don't need therapy the next
Yes.
day. And then you need it again in 6 months. You go get it. So I do the same thing with my journal. It's to straighten my head out and make me accountable. But sometimes I need to just be free and creative and just do what I'm going to do and not be structured. And other times, a structure needs to come back. And
Right.
I had to learn that the hard way. I fought it for years, and this is kind of where I'm at now with it. So you guys can, I guess, do with that how you think fits you.
And that's the other thing with this thing I'm going to roll out is I'm not putting out. I'll give people journaling tips, but you're going to have your own. Everybody's different on what they feel is important to document, and don't feel like if you're not journaling in one of these 6 ways, you're not journaling correctly. That's not the whole game. It's different for different people. Some people get more out of deadlifts. Some people get more out of working their quad. People get to their goal different ways and train slightly different. There's a common denominator of what gets you there, but it doesn't need to be super structured for every guy in a group of 10. But there's variations you got to figure out. I think it'll help people that are fuzzy on what their setup is to start saying, here's what it looks like. Here's what it looks like before it looks like it's supposed to. And keep going over to get confidence that what you're seeing isn't random anymore. But this is a whole nother webinar and discussion that we could have. Did you answer this one? So how do you control yourself from overtrading?
Yeah, I
Okay,
mentioned
yeah.
that one. I talked about that one.
The last one that we'll do. George says you're a hodag. Does that make sense?
Yeah,
Is that bad or good?
The green mythical beast. Yeah, that's the mascot of the town I'm from.
Oh, nice. All right. You must be nearby, right, George?
He must know.
Is that the high
He
school?
knows. The sports mascot or the high school mascot. Yeah.
Hodag. Fine. So, all right. Well, let's get one more question in. Oh, same one. Hold on. I didn't copy this. Just pasted it. Copy. When you traded futures, did you ever find yourself reading other participants? Do you feel you could do that in stocks? When you traded futures,
Yes.
go ahead.
Kind of. It's getting harder and harder. You used to definitely do that in futures, but as the machines have proliferated and it's gotten more sophisticated, I think it's harder to read the order book and you can do it the most during panics when shit hits the fan and people start pulling the machines out of the market and everyone's worried about something happening. You can really see like the orders come in and you can see things holding up and people just getting out at any price. You can see that. But in a regular orderly market now, I think it's really, really hard to see. I'm not saying it's impossible because someone's probably doing it, but I think for most of us, it's really hard unless there's a panic. Do you agree with that?
Yeah, I mean, when you get into, for me, it's like I try not to get. I've gotten good at doing this. When I'm bullish, almost like really bullish, I try not to do the opposite. But I'm thinking this is too obvious bullish, and I wait for a transitional moment and then play it the other way. So that's the way I would read kind of other people. It's like, yeah, I'm bullish. I think we got everybody trapped long, right? And it's like, I'm too overconfident in the direction. And it's just like, that doesn't mean I just fade it right away. It just means if I do take the long trade, if that's the case, it's a crowded trade. So I'd have a shorter leash on it. You know what I mean? Does that make sense? And then again, you got to keep your powder dry for the opportunity. It all comes down to what you had said earlier: singles and doubles, the home runs come. But if you're always looking for home runs, you strike out a ton, and you might not even be around. The coach might not even start you when it was an opportunistic pitcher, right? And you would have had your 2 home runs, but you worked yourself out of the lineup. I think trading, I think anything performance based is all about keeping yourself in a position to get the good pitch, to get the shitty pitcher, and all that stuff tends to line up. But if you're all beat up, then you get up and you take a day off, and that was the day some events came that were very catchable, right? Your setup was very clear,
right? But instead of getting so hard on yourself, if you're taking a day off because you're stressed out or you're not trading well and you miss a big day, well, you didn't miss a big day because you took a day off. You missed a big day because you put yourself in a position where you needed to take a day off because you weren't doing what you're supposed to. So it's always, instead of getting upset, it's just, there's always another opportunity, and just understand that that's, everyone does it. Like, it's not just you. That is a normal thing to go through.
Another weakness, really quick, and we'll wrap it up, but another weakness that people have is that when Brad and I started, we didn't have someone over our shoulder watching, but we knew we had accountability. It would have been hard to trade with someone watching your every decision. You might want to, if you made a bad decision, might want to throw them out of the office or blame them. But we also knew that someone was watching, right? The risk manager was watching the whole office and then had everybody's position and net P&L up. So there was always accountability, but there's accountability and there's accountability, where there's pressure but not too much pressure. And I think a weakness that a lot of people have that are listening today, that'll listen in the future, is what is yours? What is your accountability? It can't be your spouse, it's got to be someone, and I say this before and I'll say it again, you have to have someone that says you suck, not because they hate you, but because they want you to get better. And if you don't have a relationship where you can have someone be honest and say, you sucked today, you sucked this week, not because they hate you. You don't want to be around people who tell you that because they hate you, but because they truly want you to get better, because there's that relationship back and forth. That's missing, and I think it's covered a little bit in the community that this program offers, but I think people still need to push to having the Dante in the office, right? He was the risk manager for most of my career there, and half of yours probably, right? So well, even if he wasn't a good risk manager, there was someone. And then you had the meetings afterwards. The meetings,
I think it's
the group sessions.
That's one point. Yeah, it's one point that no one brought up until now, and it's a really good point, is that when you're on your own with no accountability, you kind of go on tilt and there's no one there to stop you. But it's not necessarily exciting to talk about this, but when you have someone that says, hey, you've been hitting your risk limit 3 days in a row, what's going on? Are you feeling okay? And then that you kind of just have this feeling of, I don't want to be holding losers and doing stuff that's not part of my plan, because someone's, not micromanaging me, but they are watching me, and I'm not really doing my best. And it makes you better. It makes you stronger. It gives you that extra layer of discipline to not do those stupid boredom trades because you feel like an asshole, because you look like a gambler, and no one wants to look like they're a reckless gambler in front of other people.
Absolutely. So there was discipline without too much pressure, and that was a nice. Even if he came out and says, "Hey, you all right? Take it easy." I'm sure he's come out and said that to you.
Sure.
And it's a tap on the. He's not embarrassing you. He doesn't come out and say,
"No,
what are you doing, Brad? Calm down." That wouldn't be right. Come up and say, "You all right?" Tap you on the shoulder. Didn't mean stop trading necessarily. Just meant it's like a reset button or a pause button, and those things worked. They helped. I don't remember him shutting anybody down. I'm sure it's happened. I can't think offhand when they just, told the guy to stop. I know they told.
I've definitely seen it a lot.
I've seen 2 guys fired, so that's kind of the same thing.
Yeah.
But right there, like, hey, they tapped his shoulder, says, "Can't go out in the other office," and he never came back. He came back, shut his machines off, and that was the last time I seen him. It might have been right around the time you started, but. Then another guy fell asleep in a couple of the meetings, and then he fell asleep at his desk. This was at the old office. You were back in the garage, right? Is that what they call it? The garage in the back? Were you?
Yeah.
He fell asleep.
I don't know how some of these characters even exist in the world or do any other kind of business besides some of the characters you come across in trading is, oh
Yeah.
my God.
He had a golden opportunity. He was a young kid. He sat by us, though. He wasn't back in the garage. You might even have remembered him. It might have been right before you, but I think he fell asleep in a meeting, and then he fell asleep during the day on the open or something. And they just said, that's it. They didn't embarrass him. They just said, yeah, it's not working out. But
That's funny.
it's accountability without pressure. You need pressure, but too much is not necessary. It's just not.
Right.
Um,
Right.
you need, there's always a sweet spot for everything. And I think, speaking to a lot of the guys that I have relationships with that have been around for a period of time in here, everybody could get better at community review, where you don't have to be embarrassed. You don't have to go blow by blow of what you do, and you use a good word, micromanage every decision. But someone that could be your stopper, that stop order that manages a loss could be a stop order to manage a 3-day downtrend in your P&L. Could be 1 day, could be 2 instead of 5. And, get yourself out of bad habits before they start. Everything. That's camaraderie, and you need it in any business, especially this, like a workout buddy, right, Brad? It's easier if you getting along with a guy to go work out. You don't feel like it. Come on, let's go get it over. Yeah, you know what I mean?
100%. I agree with this. Yeah.
But everybody here, well, a couple, and I'm sure the rest will filter in, is thanking you. I'm going to thank you. Great meeting. Thanks, Brad.
You're welcome.
I don't think you could see. I don't think you could see the questions outside what I pasted in here. But this was good, man, and it always is with you. I want to copy or I've got a link to his podcast. So anybody that wants it, type in a yes. In fact, instead, I'm just going to blast it out to everyone. I'll put this in the recording for those that are watching this in the future. You guys will see it next to the video. It's a link to one of the ways to listen to Brad's Trading Life podcast. And hold on, let me just find this chat to all. And then we were, there it is. I hit it. To everyone. It's just a link. No, didn't copy and paste it.
You guys can look at it. You guys can search. You'll find it. If you just type in my name, you'll find it. You can do any podcast platform, and yeah, you guys. I don't give a shit if you guys listen to it or not. It's up to you. If you're interested in the content, it's just me sharing stuff like this, and it's my outlet for. Feels good for me to talk about it. So there's no strings attached. So no obligations.
He's not angling this or no plans to monetize it at all. That's why I keep pushing it, because it's genuine.
I should get paid for it, but I don't really care. It's just maybe someday down the road I do, and that's certainly not why I would ever do it or why I'm doing it. But there's no shame in getting paid for something when you're sharing stuff either.
Exactly.
I've lived this my whole life, so I wish someone was telling me and helping me with things. I did have those people, but
we paid for it. Think of the splits. We paid for that.
Right. So it's really, I have no problems. If I was getting paid for it, hey, good for me. Great. I'm just happen to not be. It's just it's a hobby for me, and I'm going to continue to do it. And I'm going to put a website up, and I enjoy doing it. So it's pretty simple.
Well, here it's like one guy says, Ken says, "Thanks, guys. What a nice, genuine, helpful chat." So it's just.
You're welcome. Yeah, thank you for saying that. You're welcome. It feels good to connect and talk about what you do and what you spent your life doing. I didn't care about it when I was 25, but now it's just because you just change. You want to connect, and you're by yourself a lot doing this too. So it feels good to get on here. I always feel uplifted after.
Well,
I think some.
Go ahead. No, you go ahead.
I was just going to finish saying that I think someday it'd be really fun for me to compile all these lessons and things I've learned and put charts and examples and make a little book about it. But I've just never had the ambition to do that yet, but I would like to do it someday.
This is why I backed in Educate, because I started liking it. You got to remember, and you wouldn't know this, and I didn't know this when I started talking to people that were opening up accounts, not really not really, they would go the Google search way of buying indicators or systems, and it wasn't their fault. You don't know what you don't know, and you don't know the right path necessarily. So you get down, usually it's easy to go the wrong way first in this business. So you get into a lot of gurus and a lot of people that, Brad, if you talk to for 30 seconds, you know they're full of shit, right? But someone who doesn't know anything about the business, it's not their fault if they don't know that they're full of crap. So they don't have access to the type of guys that we are and from the type of venues we come from. And
No,
I
and
didn't know that or realize that until
right. And
yeah.
if I had to sell something, it would be selling a way to think, not my way to think, but how does one learn to think the right way? And how does someone have manage risk, have accountability? How do they deal with down days, down periods? All that stuff is the stuff that you actually need to learn. The other stuff is just, it's noise. It doesn't, your indicators are fine and they can work for you, but they're not going to make you a millionaire. There's no way.
You still need to be mindful of how to use them. That's the bells and the whistles and the sex appeal of it, right? But the stuff you need to learn, you don't. They're pretty elusive, and quite frankly, I was close to just quitting when I was on the floor because I couldn't make any money, and I really didn't have a place to go to learn the right stuff. And when the prop firm opportunity opened up in like a heartbeat, didn't know what a prop firm was, and I was in the business in the pit, and it was like it immediately put me around other people to do what you just said. When you're around people who know what they're doing and they're talking like traders, then you start thinking like traders. And when you think like the right trader, you do much to what you said. You learn how to manage risk before you take it, because taking risk is the indicators, putting stuff on, when to get in, the arrows and stuff. Well, now manage it. Now manage risk when you're wrong a lot, because you're supposed to be. Manage risk when out of the gate, loser. Now we're talking.
It's like watching Roger Federer play tennis in Wimbledon or something and see how he can manage to somehow win when he's not having a good day. So can you manage to not blow up when you're not on your game,
right.
and your strategy is not working, you're not seeing the trades you'd like, you're frustrated, can you not blow up? Can you not trade? Those are all the things that make you strong and make you better.
Maybe you don't lose, maybe you don't make money that day, but then you don't get blown up. You didn't break.
Right, you're able to manage the game, and then when the time is right, the home runs come. But it's just managing. I know that probably a lot of Bears fans, but being from Wisconsin, I will say an analogy I like to use is Aaron Rodgers, unlike Brett Favre, manages the game and goes for it when it's there and doesn't force it. Generally speaking, he lets the game come to him, and you see the low interceptions and the high touchdowns. So right. Trying to be more like that and less of the guy who's just chucking it up in desperation because it's been a bad game.
Yes. That's why he's a professional, and the guys never made it to the level that just chuck it up. They got passed up in the draft, and maybe didn't even make it out of high school and play college ball. Every level you go up, you remove a lot of people because the bad habits don't. You have those bad habits, they don't move in. I was watching I like that Hard Knocks series about one team.
Yeah, that's good.
They got the Browns. Well, one thing I found out by the number one pick is the backup. He might come in as a backup, even though he's the number one pick, right? Because Cleveland got this Taylor, I think the guy from Buffalo. But anyways, he's more of a veteran. He's only 29, and he's going to be the starter. But the coach, he said something, and it was this morning. I got up at like 4 this morning, and I was going to sit in front of my screens. I didn't know the pastor comment was going to come out, but I'm watching it, and this guy says to the first round draft pick, he goes, privately, he says, "What time did you get in today?" "Well, I got in a little late." He says, "Okay, but what time did Taylor get in?" "Oh, that guy's he was here at 4:30 in the morning," and he just left it at that. And that's a lesson. If I'm a rookie, got paid all that money, I'd feel like SHIT to know the guy that I'm trying to get his job and start was there 2 hours before me.
Of course.
And that's just, it doesn't mean you got to get up at 4 o'clock in the morning, guys, and do it. It's different. But you got to be more efficient than you probably are. You got to have a little work ethic and work on what's in between the ears. But
so I'm going to make one comment on that too. It's the last comment. And because this is something that I struggle with. So when I was raised, my dad was get up really early, and he was, he did hard blue collar work, and it was get up at 5:30, make your bed, So I had this mentality that that's how trading worked, where if I worked really hard, I would make way more money. And then I got so frustrated when I saw people who would not be working as hard and making more money than me in the beginning. And I totally agree with what you're saying in terms of that mentality. It's kind of an old school mentality, but it makes sense and it works. But there's also this other side that we forget about, kind of more of a maybe feminine type male side, if you want to put it that way, where you let things come, you go with the flow. When you're riding hot, you take it easy and you enjoy yourself at night and you don't overstudy. And there's a balance, because if you're a hard driver like I was, or if you're raised that way, you can beat yourself and whip yourself into the ground, and that doesn't necessarily make you a better trader. So you have to be open to taking time off sometimes and doing things that might seem like you're not working as hard, but actually you're getting further ahead because you don't want to berate yourself, I guess.
Yeah.
I've been hard on
Efficient.
myself over the years.
You want to be
Yeah.
the guy, hey, being there first and leaving last in athletics is different because they're physically working out and stuff. But
Yes, exactly.
this isn't necessarily the guy first there is going to make, but there is a work ethic that you got to be efficient at. And most guys think that just time in front of the screen means more work, and it's not their fault. That's maybe the wrong, going on the wrong way the first way. But it's yeah, screen time is helpful, but what are you looking at when you're looking at the screen? Are you great at setting up charts and getting your way around a certain platform? Fine, but that doesn't make you a great trader, because you can get around the technology. You got to be efficient in some exercises you do. I have some exercises rolled out, Brad, that I tell guys that commit to this program. I said, if you guys didn't do these exercises and you worked for me, you wouldn't work for me anymore. And they go, why? Because I'd fire you if you didn't do them. It's that important. And they're small. They're not things that you have to spend hours and hours. It just makes you more efficient. It just says,
Sure.
it's easier to get up a flight of stairs if you go and step on the first one first. You don't have to jump into the middle of the staircase. Yeah, you might get up there faster. You might also get hurt, break your leg, and now you can't climb for 2 weeks. You got to know where
Sure.
the first step is, and I don't think a lot of guys do, but there's exercises in the right programs. And I even tell people this, and everybody that'll hear this recording, the only access is to people who have invested in the course. But I always tell people that are thinking about investing in this course, I go, you don't have to do this course, but you have to do something like it. I mean, we paid a hell of a lot more money in our splits than any one guy in here, any guy out there would pay for good education. It's not even close. The 7 figures that we would have paid for our splits to learn to trade, it wasn't free. A guy said that to me a long time ago. Well, you're lucky, Anthony. You didn't have to pay for education. I wanted to throw him out a window. I says, didn't pay for education. Are you kidding me? It's a 50-50 for 3 years. Yours was 3 or 5 years, because he changed it to 5. Were you?
4 years of 50-50, then 75% after that.
Yeah. Well, mine was 3, and then he changed it to 4. Then he changed it to 5. So that's like a marathon. But Brad, thanks again, man.
Yep. Thank you guys. Good luck, everybody. Talk to you soon.
All right. Thank you again.
Okay. Bye.